All right, guys, welcome back to the Mogul Marathon Real Estate Podcast. I'm your host, Yannick Cudjoe-Virgil, and I'm super excited for our guest today. Our guest is Brian Briscoe. Now, Brian is a full-time apartment syndicator and has ownership interest in about over $50 million in commercial real estate assets. And he's also the director of multifamily educational community, the Tribe of Titans, and also the host of Diary of an Apartment Investor podcast. He recently retired from the U.S. Marines after 20 years of service. So thank you, Brian, for your service, and really excited to have you on the show.
Thanks, Yannick. Appreciate you having me. Been too long.
Absolutely. Yeah. So I really want to dive into your background because 20 years of service in the Marines and just transitioning into the real estate space, I'm sure there's a lot of stories and just learning more about your journey. Can you give the listeners a quick insight on your story and how you were able to get to where you are today?
Yeah. So speaking of military, I think when I was younger, military was like the furthest thing from my mind. I kind of had and this is absolutely wrong mentality, but I kind of had the mentality that military was for the kids that, couldn't get into college or whatever. That's just how I grew up. And I remember going to college and everything, got 2 degrees and, bachelor's and master's in math. And I wanted to be a math professor. And, September 11th really changed something in me, So, on September 12th, I was talking to a Marine Corps recruiter is essentially how that panned out. And so I was very adamant with my recruiter that, hey, I want to get back to school. I want to go back to grad school. So what's the shortest contract I can sign? And they got me in on a 3.5-year contract. And so I got a letter from the grad school, everything else, and went active duty. And it turned out that there was enough there. There was purpose, there was a sense of service, there was everything. It turns out I stayed in for 20 years, which, like I said, I never planned. And looking back, I think 2004 time frame, I read Rich Dad Poor Dad. Somebody at work had mentioned it, and I picked up a copy. Great book. Yeah. I mean, when I first read it, I don't even think I understood a quarter. All I understood reading that book was buy assets, buy assets, buy assets. The rest probably went way over my head. But, I picked up the Cash Flow Quadrant, read that book too. And I'm like, man, I got to figure out how to buy assets. And I remember thinking that, multifamily apartments were way too complicated because he talks a lot about syndication. He talks a lot about apartments in those books. And I remember thinking, man, that's way too complicated for me. But I bet you I can figure out single family, right? And that's kind of what was going through my mind at the time. And so I got onto barnesandnoble.com. I picked wrong. I was the Barnes and Noble guy and not the Amazon guy. But bought a bunch of books on, single family rentals and whatnot, and decided to jump in. So I used my VA loan to buy my first rental property, bought it as an owner occupied house and then put renters in it, used my FHA loan again. That's one of the nice things about the military. If you're moving every, 12 to 36 months, you get the option to refresh your FHA and VA loans a lot. But I started trying to buy single families every time I moved, which had I gone back and done things over again, I would have bought as many as I could have figured out how to buy at the time. But I would say probably 2016, 2017 was like the next turning point that I had where I knew my military career was eventually going to end. I was kind of looking at, the light at the end of the tunnel and for the first time seeing it and thinking, what do I want to do afterwards? What do I want to keep on doing? And what kept on coming back to my mind was real estate, because, it fascinated me. It's something that I could talk about all day long and I enjoy it. And it was, I had proof of concept from the single family home. So started looking at different ways to get in to scale. At first I was looking at scaling a single family business and caught wind of multifamily, started listening to podcasts, got into some educational programs, some networking groups. And as you know, I was very active in the DC RIA network because we saw each other at a lot of those different events. But Eventually found a couple of partners, and I'm glossing over a lot, and I'm sure you're going to, ask me to, expound on certain things, but eventually found some partners, and then got first deal under contract, closed it, and that was really a catalyst. I think when you're trying to get into, multifamily, that first deal is huge. It's the key, and without that, a lot of the brokers aren't going to pay attention. So it takes a ton of work to get your first deal, and it's a lot less work to get your second deal. So yeah, long story short, general partner on 655 units, and depending on which way the wind is blowing today, it's worth about $50 million. And just started a real estate fund, which I'm excited about. And from here on out, just excited about the future, excited to bring more real estate into the portfolio.
That's good stuff, and there's a lot to unpack there. So take me back to your military days, and also, you working and just getting that thought about getting into real estate. For me, it was, I wanted to create my own lifestyle, right? I wanted to take control of my life. Did you feel like, the military, and I could only imagine the time commitment that's required to be in the military. Is that some of the same thought patterns that you had in your journey to real estate?
Absolutely. I mean, I moved 10 times in 20 years, and I never got to choose the location, right? It was go here or get out, and it's like, okay, we can either move across the country or be unemployed. It's like, hey, deploy or get out, okay, I can go to Iraq or be unemployed type stuff. So, those were the types of decisions I had. But I think really what it was, and I was on a deployment, 2016, 2017 timeframe. And I remember just having a really, really low moment. I was away from my family, and it wasn't the first time. I had missed dozens of birthdays, dozens of holidays because of the military. And I remember just feeling, extremely down. And I had like this light bulb moment that was like, I need to get out. I need to figure out my exit plan. And I was far enough in that I knew I was going to go till my 20-year mark to retire. But I just had this moment of clarity where I realized, as long as I'm in the military, I'm going to be reliving this moment over and over and over again. They're going to tell me to go someplace. I'm going to have to go. And so that was really the catalyst for me. Was I didn't want to be on a big Navy ship in the Gulf of Aden, or the Gulf of Arabia or whatever, waiting for something to happen, being away from my family. And so it was, yes, part of it was buying the time freedom, but I think a large part of it was trying to avoid that painful moment again. And a lot of times, most of what I did while I was active duty in commercial real estate was while I was working at the Pentagon, which is a busy place. And I would leave my house at 6:15 in the morning. I'd get home at 6 p.m. at night. So average day was 12 hours away from home. And so when I was looking at, oh gosh, I'm tired, I don't want to do this, I'd close my eyes and I'd mentally put myself back on that ship. I would just put myself back in that state of mind that I was in, and I'd just let myself feel the pain again. Then I'd open my eyes and be like, never again. I'm not going to do that again. And that's what really kept me going, was remembering that one time and just putting myself back in that situation over and over again.
The one thing that keeps regurgitating in my mind when I hear you talk about your transition and just having that red pill moment on wanting to take control of your life was that pain, right? And I think, how I look at things is that people tend to have their biggest motivations when they have two things. It's either pain or pleasure.
Yeah.
And so you just being able to channel that pain and turning that energy into something that you can convert to change your life, create your own life by design, and create your own destiny is something that I think a lot of people are trying to get to, right?
Yeah.
Because it takes a lot of guts to go out there and be an entrepreneur, first and foremost. But I would imagine there was some safety from the military, right? And having that paycheck, right? How did you overcome that as well? Because that's something that's important to note about the transition into the world of real estate or just entrepreneurship?
I know myself well, and I knew at the time that if I didn't have a solid backup option, I would stay in the Marine Corps. And that's part of the reason I went 20 years, is because I never really sat down and thought, what's next? It was always just, put my head down, work, 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 work. And then, oh my gosh, I've got orders to the next place. Okay, well, I don't have any other options, so I'm going to do it. So knowing that about myself, I gave myself 3 years. Right around my 17-year mark, I said, okay, the earliest I can retire is October 31st, 2021. And I wrote that date down everywhere, October 31st, 2021. I actually started a countdown to that date, and I kept that countdown every single day. And if you would have talked to me 2 or 3 years ago, you could have asked me, hey, what's your countdown at today? And I would have given you the number. And I kept that foremost on my mind. So one thing is I kept it 100% in front of me. I need to replace my active duty income by October 31st, 2021. This started in 2018. And I would tell myself that every day on the metro going to the Pentagon. I had this little card in my bag that I would pull out, and I had these affirmations, and it's like, I need to replace my income. So a lot of it was just keeping it foremost in my mind. And the other decision that I really made was the decision that I was going to make real estate work. And the way that panned out is I essentially told myself that I'm never going to look for another job. And there were probably a half a dozen people in my office that retired while I was working there at the Pentagon. And half of them still work at the Pentagon. They walked out in a uniform one day, and 2 weeks later walked back in a business suit, right? So I committed to myself that I would never look for another job. And between those two things, that gave me enough motivation, gave me what it took to keep on doing the daily activities, and I would remember the pain, and I would keep focused on that date, October 31st, 2021. And, if I wasn't, doing something with my family, or if I wasn't doing something related to my W-2 job, I was pretty much doing something related to real estate. And that's basically what it took.
The thing about real estate that I love is that the cash flow gives you choices. Mm-hmm. And you were able to sit down, you had a 3-year goal, right? Mm-hmm. And you were able to sit down and say to yourself, I want to replace my income with cash flow or real estate in general, right? And I think that's the beauty of this business, is that it's real, right? I quit my job in the asset management space about 3 or 4 months ago. And that was the same thing that I wanted to do, right? I could have left, a year ago, 2 years ago. But for me, it was about having that consistent income coming in, and real estate was the great vehicle to do that. So that's an amazing story. So you were able to transition out of the military into real estate, but talk about, how difficult, or what was some of the challenges that you had, growing a real estate business within a demanding field like the military, where you're spending 12 hours between 6 to 6, and it's probably a bunch of chaos going on maybe on a daily basis, but growing a private equity business is not easy by any means. How were you able to do that?
By carving out time, and even at the Pentagon. Now, fortunately, I had a job at the Pentagon where I had a little bit of flexibility, right? So I started posting on LinkedIn consistently. I made it my goal to make LinkedIn a place where I would build my platform. And, I started looking at some of the LinkedIn, how to make your post work best. And the optimal time to post was between 9 o'clock and 10 o'clock Eastern, right? That's what I learned from a lot of websites. And so, one thing I did is, late at night, right, the last thing I did before going to bed is I had my phone. I would type up my LinkedIn post, and I would save it in the LinkedIn app. I'd walk out of my office every day at about 9:30, 9:45, just say, hey guys, I'm going to go take a walk, which was common. People would just get up and, hey, I'll be back in 5 minutes. I just need to stretch my legs. I'd walk out, grab my phone from the box outside. You couldn't have your phone in the office, but grab my phone from the lockbox, go out to the 5th floor by the window, and, release that post, send that post out. So a lot of it was just being very deliberate and carving out time. So when I wanted to talk to a broker, I would set up appointments with the broker, kind of like a lot of people do with Calendly now. Is call a broker up or I email a broker and say, hey, can we talk tomorrow at and give them a specific time. And same thing, I'd just keep track of it. I'd walk out of my office, and like I said, I had a fairly flexible job. Walk out of my office, grab my cell phone, go make a call, or go shoot off an email, or go shoot off a text. But everybody, most jobs, you typically have time for lunch, and most of my lunches were, sitting at a table at the subway in the Pentagon with on Wi-Fi, shooting out emails or texts, or in the courtyard on the phone. And the other thing I did is I was on a train for an hour a day. I bought an iPad, and I was doing a lot of stuff from my iPad, underwriting properties from my iPad on the train. From work.
How is that possible?
Some days you're sitting like this doing it, but I had a couple of hacks. I think everybody who's in the metro system does. You got the times listed on the metro chart, and you're familiar with it. But if it's a train that comes every 5 minutes and you see 553, you always take that train with the 3-minute gap, right? So because it's going to have people on it. And so I would occasionally let one train go by, because looking at the times, I'm like, okay, there was an 8-minute gap between this train and that train. There's a 3-minute gap for the next one. And that train would typically have fewer people on it. And so I'd go in, I'd be able to actually do a little bit more work. So a lot of little hacks, and occasionally it meant, an extra 5 or 10 minutes in the metro station. But, typically in the metro station, I had Wi-Fi and I was able to do what I needed anyway. So I leveraged every second that I could. And so, during the commute, during lunch hour, the Pentagon gym has amazing Wi-Fi. And so I'd go to the gym during the day, and, there was a table with a desk in the back of the gym. And, after my workout, I sit down, tap out an email or two, and do my workout and do the same thing. So it was just being very deliberate, finding every second that I could to be able to dedicate towards real estate. And then, we're given 30 days of leave or vacation a year. So, every single day of leave I had was, touring properties, visiting properties, asset management, or something like that. So that's really what it was. It was just 100% focus. It was, my job, I have to do my job. So that's not moving. My family, I got to take care of my family. So that's not moving. Everything else, fell off the calendar.
Yeah. I think it comes down to dedication in this business, right? I can remember myself, within my asset management, gig, I used to steal, I definitely steal some time on the clock, ducking off into the conference room to do a Zoom call, going outside to take a phone call. And it kind of became, just kind of created a lot of anxiety for me. Yeah. And, just stress and frustration, because it's like, I want to respond to this email, but I can't because, I haven't this assignment to do. But I think, for anyone who has that true entrepreneurial spirit, I think it's just better off for you to just live out what you want to do, right? Yeah. Because I think that's the only way that you would really be truly happy with what you're doing, right? Or else it's just going to be a bunch of just stress, right? What do you think? What are your thoughts on that?
There's definitely, and I don't know if it's cultural or what, but there was a little bit of anxiety. I tried not to bring work inside the Pentagon, but there were a couple of days, like, the week before you close on a property, it's usually extremely busy. In those weeks, it was just like, I was always walking out to check my phone. Did I get a text? Did I miss a call?
And they're just like, hey, Brian is taking extra long breaks.
Yeah, and it was, I was worried. And now my job in the Pentagon, it was not a crucial job. Every once in a while, there would be something really, really important that I was needed for now. And really the biggest thing is, okay, if I walk out of the office for 30 minutes, is there going to be one of these times where the general needs me, And it happened, a couple times a month where, somebody would come grab me, hey, the general has a question about X and you need to answer it now, right? But a lot of the anxiety was, if I step out for more than a couple of minutes, is one of that thing going to happen? Or if I change over, and Marines are really specific with uniforms. We can't wear uniforms outside the Pentagon, but if I change over to my civilian clothes and I walk 2 blocks to the FedEx to send in my notarized documents to close on a property, it's going to take me 40 minutes. Is that going to be when the general comes? And how would I respond to that? And there was a lot of anxiety in that one. It was just like, okay, well, I'll just tell everybody I'll be back in 40 minutes and hustle. And so, a couple days before closing, if you were on the south side of the Pentagon, you'd probably see Brian Briscoe running with a folder full of documents and dropping them off the UPS.
Brings back so many memories of just the same things that I've dealt with, with my transition as well. So we all kind of go through the same things. It's just it's funny to hear you experience the same things in a different setting. But walk us through your first deal, right? Mm-hmm. And I know a little bit about your background and you being able to successfully partner up and find a team which helped you get to where you are today, right? You scaled from 0 to 50 million. Walk us through that first deal and how you were able to leverage partnerships to do your first deal in the multifamily space.
Yeah, the first deal, I had a really hard time getting traction with brokers, and I was frustrated because the brokers weren't calling me back. I wasn't getting the deal flow that everyone else was talking about. Oh, I underwrite 5 deals a week, and I was having a hard time getting brokers just to pay attention to me. Take my phone calls, respond to emails or texts or whatever. And so the way the first deal came about is I just put a week on the calendar, went to my boss and said, I'm going to take leave from this day to this day, and he's like, okay. And I started calling every single broker in the state of South Carolina, because that was our target market, trying to make appointments. And, after probably 3 or 4 dozen calls, I ended up with 3 brokers that were willing to take a little bit of time for me. And it turns out that when I was meeting with one of the brokers, they said, hey, so you're looking at this size deal, this area. Well, we just had a property owner say he wanted to sell a property that meets your criteria. It's a couple miles from here. Do you want to go see it? And didn't know it at the time, but that was our first deal. I went and I saw it, and I was more interested in another deal that these guys had, but long story short, the owner I don't know the whole story between the broker and the owner, but the broker had told me that the owner was having second thoughts on selling, and so they didn't market it to anybody else. They never came up with an OM. It was just, I knew this property, I'd walked the property. And so a month later I said, hey, is that still available? And the broker said, probably, put in an LOI and we'll see. I'm like, we can do that? They're like, yeah. Put an LOI in front of the owner, and if he wants to sell, he'll sign it. I'm like, all right. And so that's what we did, and we got it. But backing up as far as partnerships, I was involved in several different networking groups. I mean, you saw me at a lot of the multifamily meetups in the DC area. I was going to one up towards Baltimore, one in College Park, one in Ashburn, Virginia, one in downtown DC. I was going to all of these different meetups, engaged in a lot of different social media groups that were all, multifamily investors. But eventually I found somebody that, we didn't agree at the beginning. We're all like, hey, let's go build a company and, buy $50 million worth of assets. I don't think it works that way very often. But at the end of the day, we had agreed to collaborate. We had agreed to review each other's underwriting. It's like, hey, when I underwrite a property, can I send it to you and you double check it? We went back and forth with like that for a little bit. And then we decided to start collaborating on individual properties. Like, hey, this one is, within your buy criteria and it's within my buy criteria. Why don't we put a joint LOI in? And that's how the partnership started. And so when this property that I was speaking of, when I put the LOI in on that one, it was in collaboration with, one other guy at the time. I was mainly working with a guy named Eric, and, I sent him the property. He'd look it over. We both looked it over. We're both happy. We put the LOI in, and when it was signed, it was I'll tell you what, it's kind of weird because in a way everybody's really anticipating that first property and they're anticipating, but part of me was like, you know, I hope I get this. But I'll be honest, there was a part of me that was also saying, man, I hope they say no because that could be a big problem. It's gonna be a lot of work, But anyway, we got it. We ended up closing, brought a couple more people into the deal, and from that group, we ended up forming Four Oaks Capital. And I actually, about 4 months ago, I left Four Oaks Capital. So two of the founding members, me and one other guy, decided we were going to leave. The other guy decided first, and I basically followed him. But so I was with Four Oaks for about 3 years. We closed on 9 properties together. I've done one outside of Four Oaks, and hopefully, a couple more on the horizon.
That's really great. I think from just watching your journey throughout the multifamily space,
Mm-hmm.
I've seen you take a lot of action to get to where you are today.
Mm-hmm.
We were in the same mastermind, so to speak, right? The Michael Blank's mastermind, and I saw you just post a lot of just, whether it's questions, responses, like you were everywhere. And I think success happens when you just take action, and it's for some reason, the way that the universe works is that results just follow, just get up, take action. But I think you would probably attest to this in the sense of, your success definitely was tied to some degree in your ability to create successful partnerships, right? Would you agree with that with respect to Four Oaks Capital and how that helped you to propel to where you are today?
Speaking of that Slack channel, that's where I met my partnership. And how that started for me is I got into that Slack channel, and it wasn't quite what was advertised. It wasn't 100% what I thought it should be. And I kind of had a couple of thoughts. I'm like, okay, should I just abandon this? I'm like, well, I'm paying for it. I might as well try to make good use out of it. But I started seeing a couple of very, very basic questions that I knew how to answer. And I'm like, oh, I can answer that question. But what I started doing is I had the realization one day, and it was probably on the metro ride home from the Pentagon, that if somebody's 3 or 4 weeks ahead of me or 3 or 4 months ahead of me in their progress, and they're asking a question on this forum, it's probably a question I'm going to have in 3 or 4 months. And so what I started doing is when somebody would post a question, I would research the answer. I had access to a couple of different online courses and podcasts and everything else. And I would research the answer. I'd find the answer. And I would say, hey, on podcast episode such and such for whoever, they give this as the answer. And so that's really what that started out as. And I started gaining a reputation where people would tag me and say, hey, Brian, do you know the answer to this? And that's really what led to the partnerships more than anything else, was putting myself out there, being visible, and providing value. People inside that group saw that I was providing value. And when it came time for me to, hey, I need to find partners, there were a lot of potential partners there because I had been adding that value. But it really started just kind of with one question that I knew I could answer, and then a realization that I'm going to have to figure this out anyway. I might as well just look up the answer. I'll post it in there. And I started gaining a lot of traction. And I took that same traction and moved it over to LinkedIn too. And that's basically what I've been doing there.
That's great. I think the way that you've been able to, again, just take action and turn that into results is just something that's phenomenal. And people, sometimes just sit around and think, hey, results are just going to come, right? But positioning yourself as an authority and then also taking action, what a great way to help you, get those partners or just get that traction in your business. I want to pivot to multifamily operations, right? Because you have an extensive amount of experience with your track record in the real estate space and specifically multifamily. And I know that in this space, people don't usually talk about the operations in real estate, specifically multifamily, right? There's a lot of
Mhm.
content out there about acquisitions, how to raise capital, how to close a deal, but the real work starts after you close the deal, right? Like, why do you think that is? Like, why is multifamily operations overlooked in this industry?
I think it's very sequential. Number one, it's one of those where there's a lot of money. People will pay money to learn how to get their first deal. And when you look at, the first deal is a big filter. I was talking to somebody from one of the large coaching programs in the nation, and they said they had about a 15% success rate. People who were putting $30,000 down, $40,000 down to pay for a mentor, they were having about a 15% success rate on those people actually closing on a deal, right? So it's a big money thing to talk about getting your first deal because a lot of people are willing to pay for that. People who are trying to get their first deal are not willing to pay for a class on multifamily operations because the deal's got to come first. The other thing I've noticed is, a lot of people like to keep operations hush hush, and I think we've been very fortunate in the last, probably decade that the real estate market has just gone up and up and up. And so, you haven't had to be a really great operator to make a ton of money. You had to buy is what it was. And I think anything you bought in 2018, you could have sold in 2021 and made like a 50% IRR, right? It doesn't matter. So part of it, I think, is just, some people just don't want people to know about their operations. It's like, we're struggling. I have a podcast as well. We've done 300 episodes, and what a lot of people will say when we're not recording is a lot different than what they say when we are recording. It's like, yeah, we've struggled with this property. We've had a hard time with that property, and man, the management over here is a headache. And I mean, you get a couple of property owners into a room, around a dinner table or, with drinks in hand, and you hear a lot of those horror stories. And I think a lot of it is just image. You don't want to be portrayed as a poor operator, but, it's not talked about a lot in the educational space because people don't pay for it.
That makes total sense. I think, asset management is one of the, if not most important aspects of being successful in this space, right? Because after you close, there's a ton of work from a value add perspective. I mean, you have dealing with contractors, renovating, someone has to, monitor your pro forma, make sure
Mhm.
that the financials are in line with where you want it to be. Someone's got to manage the property manager, someone has to do the blocking and tackling on a,
Yeah.
on a daily basis within the asset management space. And quite frankly, it's not, sexy to talk
It's
about,
not.
right? It's
No.
cooler to talk about, hey, we just closed this, $100 million deal or this $20 million deal. Look at me. But
It's
the
like being
operationals,
the offensive lineman. Nobody knows who the offensive lineman is, right? But the running backs and quarterbacks and the guys who are getting the sacks and the tackles and interceptions, all those guys. But yeah, it's like the offensive lineman. It's a very important part, but it's one that nobody. It's not sexy. You're not putting up big stats. So yeah, I think that's what it's
yeah.
like.
No, absolutely. That's a great analogy. What were some of the lessons that you've learned that, may have helped you be a stronger operator, maybe in some trials and tribulations that you've had on some of your deals, or just things that are part of just growing pains?
Part of it is you have to know what your property manager's capabilities are, right? And that's, some property managers are really good at certain things. Some property managers are really good at other things. The first property management shop, and we've cycled through property managers more than, wow, it's been a lot. Let's put it that way. But our first property manager was really good at renovations. They're in-house construction teams, and they did an amazing job getting units turned quickly. They weren't great at leasing, and the owner of this property management company was a general contractor. He went from a fix and flipper to a property manager. And so they were really good at that. And we went away from them to a different company because we wanted somebody who was better with the leasing and the financial reporting piece. And they were terrible at the construction part, at managing the construction and everything else. So I think it's really just a matter of, you have to know what your property manager's strengths and weaknesses are. I'm convinced that there's no property manager out there that's strong across the board, but know what their strengths and weaknesses are, and then be able to compensate for what their strengths and weaknesses are. So if your business plan include, churning 10 units a month because you've got a 200 unit property that you want to get renovated in a 2-year period, and your property management company can't handle 10 units per month, you've got to jump in and fill in that gap. Let your property manager do what they're good at, and then figure out, okay, maybe we'll hire a construction manager, or maybe, hey, somebody in the GP can manage the construction management part, where they're finding the crews and they're just, liaising with the property management company to make sure these crews have access. So I think that's one of the biggest keys with management. The property manager is going to be where the rubber meets the road, but they're not going to be good at everything. You got to know what they're good at and be able to fill in the blanks thereafter, wherever they're not.
That's 100% true. And that is something that I've been able to learn prior to getting into, multifamily syndications from the asset management space, right? I've seen, private equity firms, they tend to have at least one component of the, the system, so to speak, in-house, whether it's a property management company, a leasing team, or construction, because all of those three phases have a direct impact on you being able to execute the business plan. And property management is a very important part of that. And I think that, once you're able to have at least one of those components in-house, that's a great way to control your destiny within the space, right? And then also just evaluating people. But go ahead.
Yeah. I was going to say, at some point we were doing, different property and different management teams. At some point we were doing all of it. I mean, doing, listing the property on, Facebook.
It's probably a ton of work.
Yeah, it is. It's not the type of work you expected. I mean, I think a lot of people expect, we'll buy the property, we'll hand the keys over to the property manager, and, magic happens, right? But it's not magical.
Absolutely not. It's asset management is a lot of work. So I know that you've recently shifted, right? You went off and you formed Streamline Capital Group. And there's a large focus on capital raising, and you have been one of the more successful people, I think, about with regards to leveraging LinkedIn and just building a community. Can you talk more about, your capital raising strategy and, how that has been able to, help you grow to the 50 million as well, where you are today?
There's been a lot of consistent posting, and I think, my strategy has been more of an educational type thing. I try to kind of push the envelope. Like yesterday, a lot of people talk about conservative underwriting, and I just went on a rant why, nobody writes conservatively, but underwrites conservative. But, I try to kind of be a truth teller, but a lot of times I'll take economic data, when inflation reports come out or jobless reports comes out or whatever, I try to basically say, this is how this is going to affect multifamily. And I put a lot of educational type stuff out there. And correspondingly, sometimes people will look at my posts and follow me, and it'll be like 3 months where they're, liking my post, once or twice a week. And eventually they'll reach out to me and say, hey, I'm looking at investing. Do you have any opportunities? So really, I think what I try to do is become attractive, and make my LinkedIn feed the source for a lot of people who are looking for more information. And when they're ready, if I'm where they go to learn more about the industry, then they're going to invest with me as well. And that's actually been, the LinkedIn's been phenomenally successful at finding people who want to invest.
Again, you have been probably one of the more consistent posters, that's a word, on LinkedIn, right? And I think that alone, the consistency behind posting on social media, being that go-to person for educational resources, being a thought leader, people will gravitate to that because they know what to expect when they go to a Brian Briscoe's page, right? They might read something from the Washington Post, but then Brian Briscoe is going to break it down on an intellectual level, but also easy for a fifth grader really to understand, right? Which is that kind of like your strategy as well with education? Obviously, real estate, private equity, multifamily, it can get complicated.
Yeah, I mean that is essentially what I'm trying to do is put it into terms people, because I mean most people don't get past the headlines, on whatever they're listening to. They don't get past the headlines, and there's a lot of fear, there's a lot of uncertainty in the market, inflation and recession and inverted yield curve and rising interest rates and whatnot. Those have been kind of the buzzwords in the last 6 months, but so a lot of my posts go around. I read the Wall Street Journal, and I kind of pay attention to what people are saying on LinkedIn and Twitter. And that really kind of guides me. Hey, what's the buzz right now? What are people worried about? And, if people today are worried about rising interest rates, I tell them, I put things in perspective and I try to figure out a way to explain it to somebody like, hey, it's still a good time to invest in real estate, even with the rising real interest rates. Here's why. So try to kind of take what the buzz is and what kind of the things people are fearing with the news and the economy, and trying to turn that around, educate people. Hey, it's not that bad. Yeah, okay, interest rates right now, yeah, the federal funds rate is about 2.75. Guess what? That's where we were 3 years ago. It's not new. So that's kind of the approach I take, is a lot of education and a lot of just taking current events and putting a positive spin on it.
Yeah, what a great way to stay relevant too, when we live in a space where everyone is trying to grab attention, and there are other publications out there that list some of your investors or people who are interested in you, who follow you, can follow. But being able to take relevant topics and making them educational and intriguing, but then also being that point of contact is something that I think is great, and likely has contributed a lot to your success. So tell me a time where you felt stuck and frustrated in this journey, right? I like to say that real estate is a marathon, not a sprint. And so tell me a time, maybe the listeners today maybe are going through some things, and some of the same struggles that you might have dealt with in the past, but tell me a time where you were able to break through a specific moment and how you overcame that to get to where you are today.
Well, we already talked about the ship time. I just recently left Four Oaks. That was difficult for me because I guess in my mind, I had kind of tied everything with Four Oaks. Like, okay, when I was looking at retiring and getting out, I'm like, well, Four Oaks is there. I got my partnership already set. We've got properties, we got a track record, we got some history going on, but internally things weren't going great. We weren't talking as much as we should. We really stovepiped in our responsibilities. For one reason or another, our acquisitions kind of, went down the toilet. We went on a long stretch without any acquisitions, when I felt that we should have been buying just about every property around. So, I was going through that hard time. And then one of my partners called me. I was at the gym in the morning, it's 7:30 in the morning, and my partner's calling me. I'm like, if he's calling me this early, I better answer, right? So, and he mentioned he was, hey, I need to leave the company, gave all of his reasons. And for the next couple of months, I really had a lot of, mental and emotional anguish. It's like, okay, is this the end of Four Oaks? Is this, we had a partnership and now he's leaving. And now, so there was a whole lot of uncertainty going forward. And I didn't really know what to do. And it took me several months of, kind of dealing with this of, okay, what's next for us? Well, I pinned all my hopes on Four Oaks, and I just retired. And, 3 weeks later, he tells me he's leaving the company. And so for me, there was just a lot of, like I said, mental and emotional, kind of a storm brewing on the inside. I probably, my wife will probably tell you that I kind of wasn't very happy. I was just kind of numb to a lot of things. But really what it took is, I think Jocko Willing talks a lot about, you're not always motivated. You can be disciplined. You need to be disciplined, and kept on going through the motions and kept on talking to people about everything. And, very slowly started realizing I had everything I needed to still be successful. I can change partners. I can find new partners. I have a whole bunch of people to choose from my LinkedIn network, from the Tribe of Titans, from everything else, from the podcast. And yeah, really getting through that it took a while, but it was just a matter of sitting down, assessing what I had, and realizing that, my future was never tied to Four Oaks. My future is 100% tied to me. And it just took a really good friend, sitting down with her and talking about it to, get me through that and make me realize, yeah, I do have a lot going for me. And, anyway, that was really it. And there's probably a two or 3 month period from, I don't know, December to February, maybe a little longer, where I was pretty much down in the doldrums all the time. But that was it. I think it was just a matter of, maintaining discipline, keep on doing what I was doing, keep on getting on the investor calls, keep on posting on LinkedIn. And you could probably go back to posts from that time frame, and there's probably, you'll notice a little edge to a lot of the posts, because that's the mindset I was in. But edgy actually works very well, it turns out.
One of the things I always like to say is that, there's always a time in life where you're going to have to pivot and make those changes, right? And there's sometimes things change around you that you can't control, but what you can control is your reaction to what happened to the situation, And then I also like to say that when your back is up against the wall, when you have to make changes, and when things happen in life, you don't rise to the occasion, you rise to the level of your training, right? Similar to your military background, right? And you knew that, hey, it's all on me. I have the discipline, I have the experience, my success, my family's legacy is not tied to where I am today. And so, kudos to you for being able to realize that. And because sometimes we all go through it, right? We all have certain situations where it's easy to put your head down and say, oh, why me, and get in the pouty situation. But the ones who are able to pivot quickly, I think, are the ones who are able to be successful, right? It's all about pivoting fairly quickly. So, kudos for you on that transition. So if you were to start this entire marathon over again, what would you do differently?
If anything, I would have tried to move faster. I would have stretched a little more and tried to do things faster. I mean, with the way the economy and real estate has performed in 2020 and 2021, there were a couple of assets that we got outbid on, because we were trying to, negotiate the best price ever, or trying to get really, really good pricing. I wish I would have just stretched a little more and been a little less conservative with our underwriting, so to speak, because there are a couple of deals that we knew were good deals, and we came in with a lowball offer and somebody else got the deal. So I think really what I would have done is just been a little more realistic, and, instead of trying to lowball people, give people a good price. It's like, what, if we're offering them 4.1, so we eventually get the property at 4.5, why don't we just start at 4.5 and just, stick firm? But I think we would have stretched to buy more and to do more.
That makes total sense. I think, where the market is today, I mean, we're obviously in a supply and demand situation where we as investors have the power, right? We have, this product that, there's a huge demand for it. And I think, I don't think that you can win deals in this market by being conservative, because everyone is looking at the same deal. And, for us, the way that we've been able to win deals is just, through our operational expertise, right? And finding ways to cut costs here and there, but still make the deal pencil in a way that we're not being too aggressive. So I think this whole context of conservative underwriting, I think it has some validity to it. And I think you still need to be surrounded with the fundamentals of just base level underwriting. But I think with the tailwinds that we have behind us in this space, to say that you're going to win a deal with just 100% conservative underwriting, I think that's a setup for failure.
Yeah, absolutely is. Absolutely is. So yeah, I think just being a little more realistic on underwriting and not trying to be too conservative. But, you win some, you lose some, and you learn from every one.
Yeah. So last question, what would you consider to be your secret sauce today for success? What about Brian Briscoe?
Yeah, I mean, I've been very successful. I think really it is just add value. I mean, people have people have told me recently in the last week that I attract people because I try to help people. So if people come to me and, hey, I'm trying to get into syndication. Can you give me some tips? I'm like, yeah, sure. Tell me what you're doing, and I do my best to help people. And that's worked for raising capital as well. When people come to me with, hey, I've got this much money, I want to invest it. Can you help me figure out the best thing for me? I'm not an investment advisor, but I'll tell them what I do. But the thing is I try to care about the people and I try to help them. And that tends to resonate with a lot of people.
Really cool. I think adding value is a great way to propel yourself forward in business, because when in a world where everyone's just asking for your time and
Yeah.
people are looking at you, I'm sure you get a ton of emails and LinkedIn messages about, hey, can we get on a call? But being able to just find a way to add value is something that I think people would appreciate, but then also can help you propel your business forward as well, which is I think partly of how you were able to create those partnerships to do your first deal, right? Was just finding a way to add value, through the Slack channel or whatever the case may be within your partnership is really phenomenal in what you were able to do. So talk about the Tribe of Titans and your multifamily educational group, and just the goals for Streamline Capital Group, and if anyone is interested in investing, how to find you.
So the Tribe of Titans is my way to help people who want to syndicate. And after taking dozens and dozens of calls from people who asked me for advice, I started writing my answers down. Instead of giving answers on the fly, if somebody would ask me a question about one particular subject, I would, it was usually on the metro going home from the Pentagon. Okay, somebody asked me about this last night. I don't have anything burning right now. I would just type something up. And that really ended up being, the Tribe of Titans is my way of helping more and more people at once. So a lot of those lessons learned, I've basically written up and dropped into the Tribe of Titans. And there's 200 or so people in there right now. It's a subscription based, $40 a month, not too crazy. But the idea is I want to be able to help as many people as possible get to their first deal. And we are going to come up with an operations course in there as well. Just there's not a lot of demand for it up front. But and then the Streamline Capital, that's the new investment firm. Just started a fund. If anybody's interested in investing, I always have opportunities for accredited and non-accredited investors. So I can put people into 506B or 506C deals, but just reach out and let me know. Website for the Streamline Capital Fund is streamlinecapitalgroup.com, and Tribe of Titans, thetribeoftitans.info, and that's the best place to find out about it.
Good stuff. Good stuff. So, Brian, I really appreciate you being on the show today. I know we talked about a whole lot between doing your first deal, raising capital, being able to find partnerships. We talked a little bit about that breakthrough moment. So really appreciate you being on the show today. And thank you so much for the listeners today for tuning in to our episode of the Mogul Marathon Real Estate Podcast. And let's take action today and be great. And remember that real estate is a marathon and not a sprint. So thanks so much, Brian.
Hey, thank you.